Good morning, I'm Malcolm Graham Wood and I'm here at Core Finance for my regular CEO interview. My guest today is Eytan Uliel, who's CEO of Challenger Energy Group. Eytan, good morning.
Hey, hi, Malcolm.
Great to see you again.
Yeah, very nice to be here. It's kind of weird to be doing an in-person interview after years of doing Zooms.
And it's terrible, isn't it? And last time I saw you, you were on the other end of a Zoom with a Challenger polo shirt on and all ready to go aboard a rig or something, but no, in the office.
A few people have inquired where they can get those Challenger.
Well, I thought on the way in, I thought, will he come with a whole load of Challenger merch, as the children call it now. So, I thought let's start off, right at the top, and we don't need to go through the sort of usual, what do you do? Because I think, assuming that most people know that, and I'm going to ask you what you do and in what areas and everything else. So, forgive me if we go straight in. The Chevron deal on off one was a transformatory deal for Challenger. But the first thing is, people always ask me is, what made you choose Uruguay? I mean, at the time, according to my research, people were actually leaving the country, not joining it. It was a funny time. You mentioned COVID, and there weren't people. And you always said it was Major's country, not for an E&P country, a company created in London and so on. So, tell me, how did it all start from Uruguay?
Well, sometimes things are a combination of good timing, good thinking, and good luck. And Uruguay was a bit of that for us. As you will know, we'd been involved in various things in the Caribbean. We had stuff in the Bahamas, we had Trinidad, we had Suriname, and we were looking around and COVID was happening. And the Uruguayan government had just initiated a bidding round for their licenses, and nobody, because of the pandemic, had bothered to register. Now, we had been looking at it, and to be perfectly honest, we thought we don't have a chance to actually get a license here because all the majors are going to be interested. And we thought the reason people would be interested at that point in time, which was early 2020, was that it would be a bit like an option play. Everybody knew wells were going to be drilled in Namibia. Everybody knew that if the Namibian wells were a success, it would mean good things for Uruguay because the basin in Uruguay is the conjugate margin, the direct conjugate margin of the Orange Basin in Namibia. But nobody knew how things would turn out in Namibia.
Yeah.
And so in 2020, we said, right, well, let's just put in an offer for a block. See what happens. We'll put in a very low work program commitment. The blocks in Uruguay come with a 4-year initial exploration period, and you can choose to do your work on the last day of that 4 years. So we thought we'll put in a proposition, we'll qualify and ask for a block. If a bunch of majors show up and outbid us, well, so be it. But let's see what happens. And we did that. We did it in May of 2020 when the pandemic was raging. Nobody else put in proposals. The government in Uruguay were keen to see activity start, and they said, all right, we'll give you guys a go. We know that you're a small company, but you seem to have good people, you seem to have good capabilities, and the proof will be in the pudding. We want to see good technical work, and we want to see you bringing in a partner, both of which we've done. So we've sort of met what our promise to the government was. We've met what our promise to our shareholders was, but that's how we got in there.
Yeah.
As I say, good timing, a bit of good thinking and design, and a bit of good luck.
And a good relationship with the government and the ministry and so on.
Fantastic.
Yeah.
I mean, I've said this in many forums. I've been doing what people call frontier exploration stuff for the better part of 20-something years now.
Yeah.
In places as weird and wonderful as China, Vietnam, India, Indonesia, all over Europe, South America. I can tell you straight up, Uruguay has been one of the best places ever to do these things because it's clear, the rules are simple, you have access, ease of doing business, things happen in an efficient, regulated manner, and they've gone out of their way to try and make Uruguay an interesting and attractive place for the oil and gas industry. So we're very happy.
Yeah, and they've been successful at that because almost as soon as you'd started doing your work on it and you were in the place, you said, right, we're going to do a farm out. You always said that you thought it would be a farm out that a well-known international major would be wanting to do. And whilst you never told me or anyone I know who else was in the room, when it came out that Chevron were your partner, I think there were two things that nothing surprised me. Let me tell you that, because you'd sort of warmed us a bit. And one was that another thing about relationships, you said to me the relationship with Chevron was good. And that's important with a super major and an E&P, micro cap, so to speak. So tell me about the what brought Chevron in and the deal you've done.
Well, we had a very well-attended farm-out process, more than 24 participants. We had a few proposals. We had a lot of serious due diligence done. In the end, we chose Chevron for 3 reasons: technical excellence, the deal that they offered, which was very good financially, and I can go through the metrics, and third of all, their partner behaviour. And we actually did due diligence on that. We phoned up other people who they're partners with, and as you allude to, when you're a small company that goes into a transaction with one of the super majors, you have to be able to go toe-to-toe with them through the project, which is not an easy thing. And you have to have some degree of confidence that they will not use their position to crush you. And there are large companies that do that when they can, and I don't want to be in that position. And the way you insure yourself against that is the transactional terms, the financial terms, but then just basic knowing who your partner is. And Chevron have a stellar reputation for always doing what they're saying. Part of our agreement was they do things quickly, and they are doing things quickly. And part of the dynamic is we're working really well with them. We're involved in all the decision making, notwithstanding they're now the operator. So it's a great relationship.
You managed to keep 40% of this, which was great because you not only took cash off the table, but you've got ongoing operating, as we'll talk about in a minute. Yeah. So you get 40%.
Yes. So we got 12.5 million cash, and Chevron has taken 60%, and they're operator of the block. Yep. And as you point out, we've retained 40%. I've said this many, many times. It was the thing we fought hardest for in any discussion, because if everything goes badly, we're not going to be having too many more conversations. And that's the nature of oil and gas exploration. But if everything goes well, what may happen is Chevron, as the operator, turn around and say, great, we found this big oil field. We now need to drill 4 appraisal wells ahead of a development. That's hundreds of millions of dollars. We as a small company need to be thinking ahead. Yeah. How are we going to participate in that? And the way you participate in it, historically, we'll just go back to the market and raise a bunch of money. Those days are gone. So you've got to actually have a plan. And our plan is cunningly simple. We've retained 40%. If Chevron make a big discovery and decide they're going hell for leather in developing the block, I guarantee you there will be a queue out the door of people who will want to buy 20% from us to pay for our share.
We'll come back to the operating level because Mike, so 3 questions down the block is one about funding. So I'll get this done now because I've said, where does this leave you on funding? You told me. And in my question, I said, I assume that you play your cards right. You'll never have to raise equity capital again because 40%, it's a lot, and it pays your way. It's only 2 tranches of 10% of some stage when Chevron come with the money.
Multiple layers to that question, Melky. Where we are financially, we're in a great place. We've got $12.5 million from Chevron. We run a very lean ship. So after paying all the bills and after keeping the company going and after paying the work program on our second block, which we can talk about, we still end 2025 with a big cash surplus, enough to carry us through 2026, well into 2027 and beyond. And my fervent desire is to never have to raise money again. Yeah. And I say that because raising money ain't fun. And B, I happen to own 6% and a bit of the company, and I don't want to be diluted any more than any other shareholders want to be diluted. So the way we will avoid that circumstance, as you point out, we have 40%, and if everything goes well, we will be aiming to file. Yeah. And we have the other block we're going to file.
Yeah. And you and I have trodden the boards too many times in the last 20 years around the city and places trying to raise nickels and dimes here and there, and it's not going to happen again.
The universe of people who want to invest in big ticket, high impact, high risk, high reward, frontier exploration stuff has shrunk dramatically. And 10 years ago, trotting the boards around London and New York, raising 20, 30 million bucks to fund a drill, not a problem. Yeah. Try to do that today. The chances of success are very, very slim.
I'm glad I'm not in that business anymore. just finish on off one. I want a quick word on the operating side. So the seismic is what's operating, what's keeping your thoughts at the moment. If I remember correctly, last time we spoke, you said Chevron have got a big seismic program, which you are towards the top of, and even with the alleged bad weather in the area, you think that'll get done pretty much regardless. Is that at the moment what's keeping you the seismic program?
Yeah, well, so Chevron are obliged.
You can't do the FID until you've done the seismic program.
The which?
The FID.
Oh, no. I mean, so no, the next step for Block 1 is seismic acquisition.
Yeah.
Chevron have designed the program as the operator. It's big. It's 3,500 or so thousand square kilometres. They're busy negotiating with various seismic vendors. The various seismic vendors, it's a matter of public record, have applied for the requisite permits they need in Uruguay. And so it's as soon as those permits are finalised and Chevron sorts out their contract, I mean, all the technical elements of the seismic program are already defined and it's ready to go. And then it'll get underway. I wish I could tell you it was going to get underway tomorrow. It's not. It will be sometime during 2025.
Yeah.
It really doesn't matter when it happens during 2025. The actual time to send a boat out and acquire the data will take, 2 or 3 months, and then it has to all be interpreted. And all of this is in support of a very critical thing, which is towards the end of 2026, next year, Chevron needs to make a decision as the operator. Do we want to move forward into drilling a first well? We obviously hope that they will. We think that the information and what we already know is pretty much interesting enough, and hopefully the 3D seismic will confirm that and enable them to pick a well location. And to remind anyone, if they do decide they're going to drill a well, we get partially carried on the cost of that well as well. So when the seismic happens, I don't know exactly, but it'll be sometime, hopefully soon, but sometime in 2025.
Yep.
And that gives you a whole bunch of data which gets interpreted in view of a drill decision. And, again, we'd like to see a well happening on this block shortly.
Shouldn't we all? That'd be great. I think we've done that. And obviously, after talking about off one in particular, I moved to off three, where seismic is a different problem altogether. Somebody did the seismic before and you got it for nothing.
Fundamentally, yes. I mean, the carry we enjoy on off one is for a seismic program that will be about $30-something million. That has already been done on off three, so we're the beneficiaries of someone else spending that money 10 years ago. What we agreed to do on off three was to license all the existing seismic, which we've done, and reprocess it, and do exactly what we did on off one, reprocess it, supplement it with a bunch of other technical studies, do AVO analysis, create a modern, up-to-date database, and look for a farm-out partner. So we're right in the thick of that work at the moment. The raw seismic data reprocessing is underway. We're about 70% of the way through that. We hope to have the sort of full technical work program wrapped up in the first half of the year so that we can open a data room July, run a farm-out process for the block, and the plan is to at least have found a partner by the end of the year.
So can I ask the daft laddie question?
Yes.
Somebody else had that seismic before.
Yes.
So did they reprocess it and then decide to relinquish the block, or did they not reprocess it? I mean, you know what I mean?
Yeah.
Somebody else has had that information, but
gave it away.
Yeah.
This is the cyclical nature of the oil and gas industry.
Not quite so daft, but
but that seismic was acquired in the period 2012 to 2016. At that stage, various people held licenses in Uruguay. Total went and drilled a well called the Raya well on what is today Block 6. That didn't come up for them. There's a very good technical reason. They just didn't drill it deep enough, we think. And the oil price cratered. And so everybody at that stage did what the majors often do. They packed up their tents, they left. Uruguay became unlicensed again, which is, again, back
where
to
we
where
came to start. Yeah.
Now, what's happened in the intervening period is the rate of technological advancement in the industry is staggering. And ways of looking at seismic data and processing it 10 years ago and today are completely different. There's all these new technologies and that allow you to take the same seismic data and look at it slightly differently and see things that maybe weren't seen before. And again, this is not just me sprouting. I mean, this is ultimately what unlocked Namibia for people. Namibia, people have been kicking around there for decades and nobody succeeded. And then ultimately, a couple of people said, well, let's take the old seismic data, let's relook at it, let's use AVO, which is a whole new, it's not a technology, it's more of a methodology and a process. And ultimately, that's what Total saw that gave them the confidence to drill the Venus well, which is, the play opener there. So, and we saw that with Area Off 1, data that was sitting there for decades, since the 1970s. That was 2D data, not even the high fidelity 3D. We reprocessed that 2D using the latest technologies and AVO, and suddenly we saw things that hadn't been seen before, new structures, new prospect, new volumetric assessments. And again, Chevron put us through the ringer in the due diligence, as did everybody else, and that all got ticked. People go, right, we see it.
So I'm right in thinking that you mentioned that you're hoping to go into the farm-out process in the second half of this year.
Yes.
So you'll open a data room. The difference between the last data room and this data room is that you'll be able to provide seismic reprocessing, which should make it more complicated, better, and so on. Are you expecting to see the same faces turn up? And
absolutely. Yeah. And maybe some new ones.
Yes.
You never quite know. I mean, ultimately, it doesn't matter how big the company, how who they are. Everybody has their own technical view. We're chasing this kind of play. We like this. We don't like that. And Area Off 3 is a different play environment to Area Off 1. So it'll appeal to some people, not appeal to others.
Yeah.
But we expect all the same people. I mean, the obvious people are the ones already in Uruguay, the ones in the southern waters of Brazil. Chevron, Apache, Shell, YPF. Just over the way in Brazil a year and a half ago now, CNOOC and Petrobras partnered with Chevron and Shell. There are people.
So you just had to put a sign up outside saying no time wasters.
No, there will inevitably be tire kickers and doing a bit of data mining. But, if the process from Off 1 is anything to go by, there is genuine industry interest in Uruguay and in the potential. And so we expect to have a good turnout and, I can't guarantee a result, but...
how long the farm-out process lasted in Off 1?
It was about, 9 months from beginning to end. Right. Now, we've learnt a few things. I hope we can compress it a bit, but these things take time, and they take time because in the majors, it's a technically led process.
Yeah.
Step 1 is technical due diligence. That takes however...
You might shave a bit of time off because the seismic's there and so on.
We learnt a little bit about what it is that you need to show people, or people, how to structure the data room, how to present things. So take a bit of time off. But again, I know that in the market we operate in, you've got people who are sort of news junkies. They want things today and tomorrow and next week.
Yeah.
But in the scheme of the industry, I mean, think about it. We picked up a block in 2020 and then COVID only ended in 2022. And it's less than 2 years later. We've done work. We've farmed it out. Seismic's about to happen. A well might happen within a couple of years. And this is very quick in terms of industry activity.
Right, yeah. People do think that things happen straight away.
And so whether it takes 6 months...
The thing not straight away is that if somebody took you over, then they'd be halfway the process. Come back to valuation later on or something.
Yes, okay.
I think we've done the operational stuff and Off 1 and Off 3. There are 2 or 3 sort of sidebars I'd like to a process. Now, I don't normally go into shareholder lists with people. You mentioned briefly. But first of all, management... You have 6.5% of the company, which is bought for cash by yourself, and that's what people like to see, skin in the game. Mr. Bizzle, none of the other directors have any shares tonight, but he has 4% in what is suspiciously similar family trust or something. So between you, you've got over 10%. So a good shout from the management. I'd like to know about Robert Bowes, and I'd like to know about Charleston Capital, I think it's called. And he's come up with, I don't know, 7%, something like that, and he's on the board.
Yes.
So tell us what made you, what made it millionaire Robert Bose so exciting to you?
Well, after we announced the deal with Chevron, I got sort of cold introduced to Robert. Charleston Energy are one of the few shops that still invest in this kind of big ticket frontier exploration. And their marquee investment, they were early investors in a company called Santana, which is the big success story in Manila.
Yeah.
I mean, when they invested in Santana 4 years ago, it was very similar in terms of market cap, size, and place to us. They'd got a bunch of licenses in Namibia. They had some stuff that had been farmed out. Seismic was yet to happen. Wells were yet to be drilled. Roll forward 4 years, they've had success at the end of the drill, but they may, one of their blocks has a huge discovery, and Santana is a $300-400 million company, and everyone there's made more than 10 times their money. So Robert straight up said to me, our job is to look for the next Santana. We think Uruguay has all the potential to be that. Challenger has all the potential. We'd like to be shareholders. And there was a bit of structuring. They wanted to know the Chevron deal had closed. So initially their investment was a loan that converted automatically at a premium price. Everyone seems to overlook when we closed the Chevron deal. And what happened is that loan turned into about 8.5% of Challenger Energy, and it got distributed between Charleston and some of their underlying fund investors. So at the moment, Charleston, I think, has 3.5%, but they speak, if you like, for about 8% of the register, and Robert joined the board.
Excellent. Now, I rang you up a couple of weeks ago because and you kindly took my call, because I said that Morgan Stanley had just announced a 5% stake in the company. And I said, is that Robert Bose's holding? And you said, no, it's not. It might be a bit of it here and there. So tell me, I would be very excited if Morgan Stanley's clients had taken 5%. And does it mean that you've been marketing in the States?
Yes.
Institutions going?
I mean, it is absolutely logical, given where our assets are, that we should appeal to investors in North America as much as we do to investors here in the UK. And it's something that we've never been able to do. And so since the deal with Chevron closed in November, you will have noticed our broking, we have Stifel, who joined as a co-broker. They have very good access into North America. For the first time ever, I've been seeing real engagement from North American investors of all sorts, high net worth, smaller family offices, institutions. The fact that Charleston invested and they have their own network and they've been promoting me to that. So I'm pleased to see that we're starting to get traction there, and long may it continue. I mean, as I say, there is North America, the United States, Canada. I mean, these are heartlands for oil and gas, and investors universe there really gets what we're trying to do.
They do. I mean, some people say they're following Mr. Bose in. Yeah. Some people are saying they're following the fact that Chevron are correct. And just the remaining, you presumably have got apart from Simon Posse, you presumably got a few residual Bahamas and Columbus and.
Well, a lot of those have now left, and the ones who've remained are, have finally got over the Bahamas and understand that this is now a different company and a different proposition. We also have a fairly big Australian representation. Now, I mean, I'm obviously Aussie, and I've been involved in quite a few fairly successful natural.
Well, you did a couple of raises for these entities in the past.
Yeah, and so people I know, friends, colleagues, and people who Stephen Bizzle knows, so we've got probably about 20-something% of the register in the hands of a few very high net worth Australian, resource/energy identities. And again, these are people I know personally who are not interested in buying and selling the stock in a week. They want to see this thing go the distance, as do I. Yeah. They want to see seismic shot and hopefully wells drilled and hopefully big discoveries made. And they understand the risk-reward profile of that. If nothing gets found in the end, well, nothing gets found. And if something does get found...
Well, most of these guys have been there and done that.
Yeah.
And they know, as you say, they know the game. And I think that's one of the most exciting things. And they also know that, what you've tried to do is to explain that neither you nor anybody else wants to be diluted if it is at all possible.
Absolutely.
So,
I've got my 6%, I've got 3% under option, and it always intrigues me. I really don't spend a lot of time reading bulletin boards and things like that.
Me neither.
It always intrigues me that there is this cadre of naysayers out there who seem to think that this is all some elaborate ruse on my and the board's part to protect our salaries and stretch. That is the furthest thing from the truth. This is a very stark thing. I own 6 or 7% of the company. If this company is one day a $300, $400, $500 million company on the back of a big discovery, that's what I'm in this for. My, salary, and it's important.
Fair enough.
That's
and I'm
why I
glad
need
you
it.
had an opportunity. Yeah, opportunity to say that. Otherwise, you don't get many chances.
No.
Or people like to hear it, when they can see you and the lips moving as well. So, because you can write it a million times, but people please do it. Can we just polish off all those legacy assets?
Yeah,
Let's say we're up for sale. Trinidad, Suriname,
Well, Suriname's
Bahamas. I mean, what's going?
Suriname's long gone. We shut that down. Trinidad, it costs us nothing to own. Took a few years to get to that place. We need to figure out what to do with it. It really doesn't fit in its current form. I could wax lyrical about Trinidad for hours, but that's not...
Well, so could I, because I went there last year, and it's the third time I've been there as well. So, I do wax lyrical, and there's a bit of M&A in the area as well.
So, but I think the plan, as I've said, is we need to figure out how to monetize what we have in Trinidad, either sell it to someone, partner up with someone where they foot the bills going forward, do something to move that business forward so it has its own, future. And there are 70 people who work in it who depend on it for their livelihoods. So we'll figure that out in the next few months. Bahamas is really intriguing,
Oh, that's over here.
No. If you hang around long enough, everything goes full circle. And as you know, we have our licenses there. We drilled the well. The well didn't come up. It's been on ice for 4 years. It literally costs nothing. It just sits there. And every now and again we have a conversation.
Buying the residential palace for the...
Yes. And at some point in time, we have to do something. And we've been looking at how we monetize it, maybe sell the data, maybe, but given recent events in the United States and what's happening, and suddenly whole areas of the world that were previously off limits are now back on limits and everything's changing. And to my complete shock, in the last couple of months, I've received a few very tentative inquiries. What's going on there? Would you be interested in looking at a farm out again? So I don't know what will happen there. Again, it costs nothing. It takes very little time. It's not a focus of the business. I don't want anyone to be under any misapprehension that we're going to, and we will never spend money there again in the way we did in the past. We will not drill wells. But if something turns up and and we get a good way of
money, rule anything out, but it's not got a ha'porth of a penny worth of value in your business.
No.
Which brings me to valuation.
Yeah,
we're nearly at the end, so
that's fine.
Right out front, I've had a 25p target price on this company for some time now. It was in the bucket list last year because I was so convinced.
Yes,
over a year ago, and partly because we go back a long way, and therefore I know that I'm comfortable with the things that you're saying and so on. I know all CEOs think valuations are high. I don't know what the other valuations in the market are, but I think there's some quite reasonable numbers around. But so far, you're not encouraging people like me to go over the top. I'm, to be honest, beginning to feel that 25p is a little on the conservative side. But do you ever sit there wondering about what the valuation or the market cap is? I mean, I sent you an amusing message the other day. Shares got to 10p, and I said, you better ring the bell.
Well,
and you said, come back at 20.
Well, like I said earlier, I'm in this, and I know a lot of my big shareholders are in this for what happens over a 3 to 5 year horizon. So movements today and tomorrow don't make a huge difference to my life. However, there are various ways you can look at valuation. So the most obvious is just look at what the farm out metrics tell you. Chevron gave us $12.5 million cash and are about to spend $30-something million on a seismic program half a carry on a well in order to buy 60%. So you can do the math on that. I've conveniently done it for people. It's on a slide on our website.
I've seen that. It's a good slide.
And you do the math and you get to a place where our shares, just on the basis of the look-through value of that transactional
off one on itself.
On off 25p.
Yeah, I've seen it. It's a good slide.
Then we've got off 3. Maybe we'll get a similar deal to off 1, a bit better, a bit worse, but there's value there. There has to be some value in that, okay? And that's as things stand today without anything else happening. Now, like I said to you, again, there's a pretty picture on our website, but if we go through all of this and at the end of the day, we wind up managing to retain 10, 15, 20% in a couple of blocks, and there's a discovery on just one of them. Look at what happened to Sintana. Look at what happened to any other company where discoveries are made. Suddenly, this is a $300, $400, $500 million company, and then our valuation is 10 times what it is today.
It's only seen in market cap, doesn't it?
Yeah. And then the other way of looking at these things, which I'm not a fan of because it's very hard to do apples to apples, but you can just look at all of our peers. There are half a dozen other companies doing stuff around the Atlantic margin in Trinidad, in Namibia, obviously, in Guyana, in Suriname, all over. And do they have assets better than ours? I don't think so. I'm not saying ours are better than theirs, but, and so many of these people have valuations, multiples than ours. And our situation at the moment is relatively unique. We're fully cashed up. We have no obligations. We don't need more money. Everything's paid for. We have great assets. We have a great partner. And we are the only the only junior company in that part of the world. So, as I say, to answer your question simply, Melky, look at the farm out economics. That tells you one thing.
Yeah.
Look at what the long term might be. That tells you. Look at relative, whichever one you look at. 25 is a good enough number and maybe low,
Leave that to me.
Yep.
Before we finish, I just talking about the M&A stuff and so on, and getting rid of the residuals. Now, whatever they say, every oil company executive has always got his eye open in the M&A department. Most of them will tell you that I see everything. Like everything that's around goes over my desk. Tell me you're not going to go start trying to buy something else. You've got a bit of a hatful at the moment.
No. I became CEO 4 years ago. It's been a 4-year slog, a very happy one at the moment, but it's taken a lot of hard work and a lot of effort to get to the place where we are at the moment. And I've used the phrase before, our story is now embarrassingly simple. It's something easy to explain.
Yeah.
I'm not going to do anything to mess that up at the moment. We have our hands full for the next 18 to 24 months. It's very clear what we need to do, and then we're just going to get on and do it. There are, it would be delightful if there were more things we could do in Uruguay because we've got a record. Unfortunately, the country is now fully licensed, but, we've got the farm. So, if stuff in that part of the world somehow became available, maybe we could consider it. But in terms of running around and building a portfolio, and not at all. We are focused on the knitting.
Fantastic. I've run out of time looking at the clock, but and you've almost answered my final question anyway, which is always, where do you see the company in 12 to 18 months' time?
Yes.
A quick run, sort of overall summation of
seismic done on off 1 and a well decision in the process of being made. Technical work completed on off 3. Farm out partner identified, and again moving towards a well decision. We've dealt somehow with Trinidad and the Bahamas, and that's it. We're looking towards 2 blocks in Uruguay, maturing to drilling to being drilled within a sort of 2.5 year time frame.
It's brilliant. You're in the bucket list. We published yesterday.
Thank you.
On the people who are in there from year to year, you're number one, top of the bucket list.
Thank you very much.
Which is good, and it'd be nice to see you there. Thank you very much for joining me today.
Thanks for having me, Malky.
It's a great pleasure. So today I've been interviewing Eytan Uliel, who's the CEO of Challenger Energy Group. Thank you for watching me on Core Finance on my CEO interview. So nice to see you, and look forward to seeing you again soon. Bye now.